Everybody, welcome to the show. Hey, Larry, Eric, Ray, Don, Andreas, Sergio, Rick, Rob, Rosalind, Amy, Rex, Valerie, Mary, Ann, Marianne, Diana, Craig, Indy. Good to see you. Darren, Wade, Arturo, Al, Merrill, Cliff, Tar, Dan, Douglas, John, Don, John, Don, Stephen, Maurizio, George. Welcome to the show, everybody. CPI is out. Had a little flash in volatility, little dip, little rip, and is it all clear? That's weird. Hold on. See if I had to reset those. All right, should be muted now. And welcome to the show, everybody. Welcome to the show. Man, well, what are we gonna do? What's gonna happen today? That's a good question, right? 2 inside days in a row the last 2 days. Ended up kind of on a, I don't know, whatever they call it, the inverted hammer yesterday. And right here, you can see it. That's what I'm talking about. This one right here. Maybe it is a hammer. I don't know, whatever. The hammer doji. So it looks like a giant sledgehammer, right? And inside the range, Friday. Right there. 2 days in a row. Today, well, kind of flat so far. Flat so far. On the futures, still inside the range right there. We're still inside. Still inside. I don't know. I mean, we'll talk about it more here in a minute. We'll dive down, look at the time frames. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. Hopefully I entertain you. And not a recommendation to be buying or selling any financial instrument or anything else from a guru like me. So that's no stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. You may lose money. In fact, there's a substantial risk of loss. If you desire personal financial advice, you need somebody to tell you what to do. That's what that means. You just don't know how to make your own decisions about financial stuff. You got to hire and consult a financial advisor, which is not what I do. Welcome to the show. And anybody that's on, certainly anybody that you're watching on YouTube that tells you exactly what to do, be very, very suspicious. Suspicious, I say. You need to be able to make your own decisions. That's what I'm here to try and help you do. I'm not exactly the best beginner's guide to trading, but if you got your feet under you a little bit, there's some people here that make really good money. Pay attention to what I have to say. So we had September 11th. Anybody remembers 2001? That was a fateful day in America. Remember those who gave it all. I mean, was it 2,996 people that were in that tower that just got murderized? And then the firefighters and all the rescue people that suffered in the years past. I mean, it's just such a bad time. Anyway, there's a whole generation that wasn't even alive for that, if you can believe it. Can fathom that it's been so long ago. Anyway, right there. Basically came in. Here's what's the funny. Core CPI came in high, yet it's green on here. That was in line. That was in line. I thought that's what we would see. And yeah, that was the day the internet it broke the internet. There was so many people trying to refresh news sites and stuff. You couldn't hardly get news. I was on the internet back then. One of the few people that had high-speed internet. Sitting there, I was downloading saving images, every image I could. I've got a collection of interesting images. Anyway, so in line, exactly what they were predicting, forecasting, and the the mainstream media I was seeing was like a giant decline from August inflation print year over year. Look at that giant decline. Yet, where's the giant decline? I mean, all they were doing is dropping off some of these numbers from a year ago that were higher prints. We dropped off that essentially right there. We dropped off for the year over year. We dropped off that big spike right there. So it caused a drop. That's what we got. I mean, funny enough, you drop off the 0.6 and it only drops it, 0.3. I don't know. I don't know. I don't believe, it's certainly not negative. Like, prices aren't coming down. That's still going up at 2.5% a year on average. Like, and if you do it the 1985 way or the 80s way before they adjusted it all and took out all the things, I mean, look at all the things they take out of the number. It's just ridiculous. And the way they balanced it. And if you really put in what we actually spend money on, this is more like 10% still 10%. I don't think they've quashed inflation quite like they think they have. I got the green monster here today, so it's clear. You can watch it. Whoa, you can see right through me, right through my face. Anyway, it's about the same color as the green screen behind me. Anyway, what's my opinion on DJT? It's probably going back to the bottom of the chart. That's what it is. I went through that last night. I think it was Sledge requested that one last night. So if you missed the analysis on DJT, go check it out from the 30 Minutes of Awesome show last night. All right. What'd you miss? Yeah, you missed the disclaimer. Basically, CPI, not really doing much. Tomorrow we have PPI, which if CPI is pretty benign, in line, then I'd almost guarantee that this is going to be relatively benign right here. Tomorrow, this will probably be all in line right there. Tomorrow. So there we go. There we go. Baking the numbers and getting it all ready for, I think they're housekeeping, trying to keep it all like, let's make no major issues for the election. Just kind of whitewash it. We'll be truthful after the election, whatever. I don't know. That's the way it seems to me. And so there we are. Another hammer doji so far. Today, jumping down time frames. You can see that volatility at 8:30 when the CPI print came out. Initial negative reaction. Now we're trying to break out. Trying. There's the highs from yesterday right over here. We're not quite there yet. So anybody that thinks there's clear direction in the market right now, just zoom out. Look at the daily chart right here. Look at this daily chart. We are inside the range of this candle right here. As long as we stay on that side of that range, missed the bottom just a little bit. As long as we stay inside that range, there is no clear direction in the market. That's indecision. Staying inside the range of that big flush out is indecision. Now, if we can break out, certainly if we confirm it, I'm going to hop back and forth a little bit. We confirm it breaking above this high right here. This is important. This one right here. Got to break above that high. So it's up there at 55.60. That confirms we're probably going up. Probably, it tips the odds we're more than likely going up here. Why didn't this count? Right there. We ran out of steam. Right? We proved we weren't going to break out. Like, gap up, big red. Try, drifting lower. Try to break out, big red again. Followed that up with a few more, few more down days. Now we're on the attempt again. So the market will open here in about 3 minutes. We'll get the candle. It's basically going to be right beside this candle at this point. Not really moving overnight. ES up $1 or 1 point, I guess you might say, right now. This is the S&P 500 futures. If you didn't know, this is how everybody knows what's going on all the time before the market opens. We closed up here. We gapped down here. Nothing. Bunch of nothing so far. If we can break out above the high right up here, it's indicative that we're going to go test that 5560 area on higher. On the futures, it takes a break above 5600 because that's where the top of that candle is, right there. There is a discrepancy between the two. They don't run exactly right on the money. Why? Because futures contracts are future. Like it's for future price. Right now, we're about to roll over. Hey, Ted, thank you for becoming a channel supporter. Right now, we're running on the September contract. We're about to roll over to December. That'll happen this week, I think it is. I think it's this week. Last time we did it, we left this giant gap over here in June when we rolled to September. And I said we would go fill that gap, which we have now done multiple times. It's an interesting area for the market because we gapped higher right there in June. Now we've come back and we're just hanging right there. Gaps are interesting, especially on futures. Futures don't typically leave any gaps whatsoever. All right. Yeah. Quad witching. And it's in the quarter into the, I think it's funny how everybody says triple witching, quad witching. You look at, it's basically, the daily options, the weekly options. It's kind of like the big show. You've got, dailies, weeklies, monthlies, quarterlies, all ending. And then you've got, then they go through in the index options, the futures options, all the, the futures roll over, and all these things happen on these quarterly expirations. So it brings extra volatility, usually. So we'll see what happens. That'll happen. That kind of happens next week. We'll get the contract rollover probably by the end of this week into next week for the futures, and then we'll see. We'll see. Now, if you've never, it's not Tuesday rollover. There's no, the contract actually ends next Friday, I think it is. Everybody kind of decides to quit trading the expiring contract because the brokers make you move it. And, some people move today, some people move Monday. And if you want to see the contracts, you got ESM 2024, you got ES, let's see, what is it? ES, it's not M was June. U. There's September right here. And then ESZ 2024 is December. So we're gonna move to trading this one. This ES1 will grab this price here in a couple days. Maybe Tuesday. We'll see. None of my platforms ever do it the same day. That's why I say it's not a fixed day. I'll have different numbers on different screens. It drives me crazy for a couple days until it ever all stabilizes back out. So it's based on the platform and the broker. All right. Hey, Ivan, thank you for becoming a channel supporter. And there we go. So you'll notice there's a discrepancy, right? You're like, wait, how can ESZ be 5564, but ES1 exclamation point is only 5505, and S&P 500 is only 5488. Right? That's the difference I was talking about in the contracts. If you've never seen this before, check this out. Look, here's the contracts. We have contracts all the way out to 2029 right now on ES. These are futures. They're kind of like options, but kind of not like options. All right, they're what we call futures contracts. And this is what we had before we had options. And these are highly liquid. All right. You can go long or short. You know, there's not like a call and a put. It's a futures contract. You can be either long the futures contract or short the futures contract. And you get filled immediately if you want to buy or sell. Like there's no discrepancy in it at all. And it's an interesting market, but there are options on futures. So it gets very complicated. It's a whole different realm. And CFTC doesn't like me to talk about trading futures. There's a whole different set of disclaimers and stuff. So that's why I don't usually talk about actually trading them. I just talk about looking at the chart prices and then reflecting that to what I think S&P 500 is going to do. So there you go. That we're expecting, the futures are expecting higher prices on S&P through 2029. There's no big drop predicted in the market. No nothing. You can see a little dip right in here. That's interesting. It's not consistent. There's a little spike here and a dip here. So there's a little bit of inconsistent pricing. You may be like, well, you know, how does this apply to other futures? Well, you just go look at the other futures. You can see NASDAQs. You can see Russells. You can see oil, which is interesting because it has these spikes in it, but comes down, and long-term price at 63. All the way out to 2034 right there. So if you think we're going to get some kind of big spike in oil, you can go get long some futures contracts. Of course, they won't respond nearly like the current month. And gold, check it out. Bitcoin, check it out. Rising prices, not very much though. Ethereum, rising prices. And NKD, look at that, expecting a big dip. Ouch. That's kind of wild, right? That's it's almost flat though when you really look at the numbers. It's only 150 points. They really just expect it to be flat on NKD. So you can do that for just about anything that has a future, and kind of see what the market is pricing in for the future. And it's an interesting little look just to see how things are pricing. Now look at that red, starting out red, getting a retrace, pulling it back down. Futures are still green. S&P. And what that's doing is matching. See how we closed here, we opened down here, we ran up here, we spiked, and we're pulling back a little bit. So the cash index is trying to match that a little bit. A little bit of discrepancy there. We'll see what actually happens. Now, if you've never seen how the discrepancy works, you go ES1 exclamation point minus SPX. You can do math right in here and create your own ticker or index. And there it goes. So right here, this is the what I call the discrepancy chart. Shows when the futures contract rolls over, they come back towards zero as they come to expiration. When we first rolled over, we had 71 points of discrepancy, one of the highest ever. And you have to look at this line between the red and the green candles, right like that. As we approach zero, and currently we're sitting at 28 points discrepancy. That's how much difference between the futures market and the cash market. As we get to expiration day, that'll be zero discrepancy. What's funny is historically that's run about 30 points on the rollover. And right now we're seeing a lot higher. Like back here, it was crazy to see, like 30-point discrepancy. We'd run 5, 10-point discrepancies. And you see back here, we used to actually get lower. It's called backwardation. When the futures actually run lower than the market. So can the futures run lower? Absolutely, absolutely. Back in here, used to get pops, 12 points, pretty standard. 30 points was a big discrepancy. I've watched this for years and years and years and years and years and years. And see, these were These are running the other way. They have a negative discrepancy and close it. And now we're at epic positive. I mean, look at these. Every time it gets bigger and bigger. Kind of wild. Kind of wild. Anyway, so all sorts of interesting stuff. You can really nerd out. Is there a trade here? Probably. There's probably all sorts of trades going on in here. Trading this back to flat. So anyway, what does that matter for the price of S&P today, JT? I've already told you, like, as long as we're inside the range of Friday, the market's just going, we could stay inside here through FOMC next week. FOMC meeting coming up next week, right here on the 18th, Wednesday, 18th, right there, 2 p.m. Federal funds rate. We're going to do the forecast, quarter point cut. Is the market going to be disappointed if we only do a quarter point? There's a lot of talk about a half point. And if you look at the Fed rate, I don't know the exact future for it, but if you look at the Fed rate futures, they're predicting almost 2-point cut in the next year and a half. That's like recession level cuts. Just warning. That's futures traders out there. I think it's that's the 10-year. Let's see, I can't ever remember that. ZT, I think it is. These are notes, and that's not the right one. There's different tickers. I can't remember the right ticker to pull up. I look through all this stuff on other places, and NQ still holding the range. This one's still inside also. We stay inside that range. It's still indecision. This has the opportunity to do a big breakout move, but we're just waiting for something. It's kind of like the Matrix. You've got the stuff, kid. You're just waiting on something. And as long as it sits there and waits, I don't know. I mean, that's not very helpful. Not very helpful. So we have buyouts. This is something I was talking about a couple weeks ago. The corporate buybacks. We're basically run the course on that. We're going to be tapering that off through the end of the quarter. We're right here at it, into the quarter. Start next earnings. They have a blackout window right as we switch into the new reporting period, which will be October. Earnings season will be upon us again, and then they do their buybacks. They're expected to be bigger than they've been all year. Right there, look at that. Right after the election, does that mean they're going? Are we going to get a pop? Are we going to get a drop? We don't have that corporate like that. They've already basically bought all their scheduled to buy. This will be tapering off as we head to the end of the quarter. Of course, that's kind of the way it works. So there you go. Don't have that constant $5 billion a day of buying anymore. So with the options, big options expiration next week, can we free it up? Are we going to move? Are we going to, what's the Fed going to do? Quarter point cut? Is it going to freak everybody out? We didn't do a half point cut. A lot of interesting. I'm adding protection for the downside. Already got the trade posted in the crash protection channel. Just the start. I just started. I didn't load up big, like I was talking about yesterday. You don't pay your car insurance expecting to collect on it every month. All right. So it's not a trade. It's a protection. All right. In case things go south. So this is not like I'm going to put half my portfolio in it. Yeah, that'd be like paying half the value of your house for the insurance this month. Doesn't make any sense, right? Half the value of your car for the insurance this month. Don't do that, all right? Put a small amount of money on the insurance just in case something bad happens, you can collect. So, anyway, ZQ maybe. I'm trying to. I can't remember what it is. Fed funds. Fed funds futures. Yeah, look at that right there. Although it's priced in 94, like that's. Yeah, that's not the ticker I was looking at. Yeah, Fed fund rate, interest rates, futures, but obviously we got something cooking here. Yeah, look at that. All right, oil. Check this out. Look what it did. Not surprised at all. Anybody surprised? Anybody shocked? Sometimes I get it right. Kind of expect this to pop back higher in a big way. What's interesting is we're at tank lows, yet the market is the tanks are empty in Cushing. We do not have epic high storage. The tanks are empty. The production is down. This might be artificially low right here. We could have a giant squeeze in oil. This is something I'm kind of watching. I may add, one of those insurance type positions. I may add one up here on oil out a little ways. This thing, I think, the more I've dug into the fundamentals of it, this doesn't really make sense at all as far as demand goes. Now, price-wise, I thought we were going to do that. I thought we were going to do that for a long time. There's still the opportunity we make a lower low. Still that opportunity. We're really close. We could do it. Clean this all up. Then watch out for the major up. So, anyway. What's the comparison chart doing? DGS2? Just messing around. Like we've got the 2-year rate. This is only a weekly chart. Got the 2-year constant maturity rate down here, plummeting off. And of course, Fed funds hanging out up here. We've got a large discrepancy between them. 5.3, 3.65. The market definitely pulling down that 2-year treasury. The inversion is finally ending. It's one of the longest inversions we've ever had, where the 2-year, what was it? The 2-year and the 10-year were backwards. I can't remember. Yeah, DGS 10. Turn that off. Turn that off. These are the inversions they talk about when they talk about inversions. It's one of the longest inversions we've ever had. That one a little crazy back there. Back in the 70s. Looks a lot like what we got now. We dip it and then go right back to an inversion. Look how long that was compared to the one back there. So there you go. If you didn't know how to figure out the inversion, there you go. DGS2 minus DGS10. Boom, 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 boom. All right. I'm all over the place today. It feels like talking about interesting economic indicators that I don't normally talk about. If anybody's enjoying this content, let me know in the chat. If you're not, let me know in the chat. It is something different. I do know how to like look all these things up. I don't necessarily remember all the tickers on TradingView. I got different sources for a lot of these things, and the tickers don't always make sense to me on TradingView. Sometimes I have to search for them, and I'm sitting here doing this live, trying to pull these up, things I look at other places. So gold getting whacked a little bit. Came up to the top of the range, getting whacked on that inflation number. Look at that. Ouch. Pretty much the whole range right there. Just more sideways consolidation. If we break below the range. Ooh, that was weird. Thank you for doing that. Chart. If we break below that range, watch out for a return down here. If we can break out the top in any meaningful way, which I kind of give a little bit of bias to doing, up in a big way. So there's the range. There's the resistance. There's the support. Target up here, basically just below 2,700. If we can get out of the top. Big if. And silver has the same setup as the NQ and Russell with this big potential upside. This is a measured bounce with a market roadmap bounce. Those are the two patterns I watch. If you're new here, market roadmap bounce, you can get the roadmap line, the orange line. Links in the description. It's like $5. Put it on your chart. And if you're just like $5, that's JT, man. I don't want to spend $5. Hey, that's okay. Click the channel name under my picture over here, and or under me, where it says Jeffrey Turnbar Trading. Click that. Go to the homepage. On there, there's a video that says my favorite indicator. It's got like the orange line going behind my head, some arrows. You can watch that video. It tells you basically how it works and gives you the code for it. It's a DIY thing. You'll have to put it on your chart yourself. I mean, come on. I got the easy button and it's $5. If you want to do the work yourself, you can watch that video. Bitcoin, not what I want to see right there. Futures, rejecting the roadmap line. Look at the actual cash index. We're just rejecting this consolidation area right there. Haven't been able to break through. Is it done? On the bottom, was this it? Big question mark. Or are we going lower low? I don't know. Price, that's only a 3-wave up. That may indicate we're going one more down. May do one more down. Right there. That would clean up the Ethereum charts. We might do it over the weekend when the futures won't be moving. Look how close we are. One more lower low cleans this chart up. This chart needs that lower low. Like this pattern is incomplete without it. So you can almost set an alarm right there. When we make that lower low, and it can get continuation lower. So that's the dangerous part here though. When we make that lower low, it's all cleaned up and ready to go higher. And that may be what all of crypto is waiting on, is Ethereum to get its head out of its rear. That can clear up Bitcoin to go higher. I think, as I've said for a few weeks now, I think all of crypto is waiting on Ethereum to get this lower low on the cash, on the spot market. Dollar just sitting here consolidating between support and resistance. It's kind of on the lower end too. Watch for that to break down. Probably going lower. NKD consolidating here. Has this low, this high. Has support on down to 34,000. Right in there. If we hold that and turn higher, could be heading right up here. If we break down below that, we're probably coming on down in here, around 29,000. And does the carry trade continue to unwind? And does this, so here's the big risk next week. Fed fund cuts rates. All of a sudden, Japan can't buy as many treasuries. Causes the Japanese stock market to go down. Causes which ripples into the US stock market, causes it to go down. Could do another big down like we had last month. Could echo that. Oop, moving the wrong thing. Could echo that right down here. Could even echo it right down here. If we get down here next week, Fed funds thing comes out. Oh gosh. And that can suck our market down too. Be careful. It's a global market. It's not, you know. Hey, Gerald, thanks for being a supporter on the channel. And ASML. Right down to support. Could go a little lower. That's support, though. That was the support I was looking for. Crazy that worked out. Let's see. Let me correct. I need to fix the fib just a little bit there. Yeah. That's the support I was looking for. We could go just a little lower, 723, possibly even down to 660. And if we get down that low, we may go to the bottom of the box here where we consolidated. Look at all these. Look at how this support right here. That right there, that right there, this right here, that gap. That's a bunch of support, and we may go test it. If we get down in here, we may come right down in here and test this. That's what to watch out for on ASML. If you're long, you should decide where you want to get out. And I got out way up here. I caught that move and got out, and then just waiting for the next opportunity. I don't even remember where did we trade this? Back here? Wasn't it somewhere? I don't even remember where. I'd have to go look at the trades. I did trade that and got out. Could have made more. Didn't catch this final move, but I think I caught that move right there. Anyway, ALB still looks like we're going lower. It's consolidating under the roadmap line. Lower is still my thoughts. First Solar consolidating on top of the roadmap line. If we can break above the 618 resistance here, could be cruising on up to 320. Doesn't look super positive right now at the moment. And Solar Edge, look at that. Whew. Man. Definitely some issues going on in solar right now. Golly. That thing just got whacked. I mean, we look at that. It hung out in this range. This is why I'm leery of these ranges when I talk about them. We broke down and it went from 200 to 20. You know, like 90% gone. That's why I caution about these ranges. I mean, that was a huge range too, 176 point range. Came down to the bottom, broke out of the bottom, and kept flushing. That's why you gotta know where you're wrong. Like if you're trying to trade one of those ranges, EMPH, this one's stuck. So I'm gonna delete that and redraw it. This one's stuck declining. Lower highs, lower highs, lower highs. Holding support right there. If it breaks down, probably cruising on down here to the 50s on in phase. Play. Dave and Buster's. Never been to a Dave and Buster's. Knoxville does not have one. And that, see that range? Broke up and right back down to the bottom of it. Break out the bottom, probably going lower low than we had right over here. Although this is on the popper list, but that looks like we might go down. So we definitely rejected off of that. That was the prior high over here. SQM. Now, you may be like, hey, JT, how in the world did you pull up this list? So I go to what's called Stock Chameleon and pull up what's popping and what's dropping. That is in the pre-market. Everything moving $2 or more, and put it on the list. You know, a lot of times that it keeps, you can see $14, $7, $13. These were in order when I pulled them. You can see most of them are $2 or more. Play is giving up a little bit of that gain. SQM still below the roadmap line and may go lower. Roku trying to break through the roadmap line after the Walmart news that they were going to make their own TV or whatever. And if you weren't familiar, back here, Walmart announced some news. They were going to make their own TV or whatever, and Roku goes. So getting back, that's potentially a reversal pattern. We have to break out, go higher. Need to get above this zone where we gap down to actually go up in a bigger way. 125. This is pharmaceutical. That's one of my not so favorite places to trade. Pharmaceutical, biotech, anything that's FDA, Food and Drug Administration of the United States involved in, tends to be unreliable pattern-wise. While this could break higher and go higher up to 106, it also can very easily gap fill down to this $40 area. And that is a very, very large range right there. And Children's Place, still on the pathway down. That looks so bad. That almost looks like a dumpster fire chart, except it doesn't have the reverse split yet. This one may go out of business. That is not long-term viable. NVO, that kind of chart. NVO, just hanging. Holding the roadmap line. We break above this gap down over here. 152, 156. And let's get lit on some lithium battery tech. That looks pretty bad. Thought everything is running off of lithium these days. Look how bad that chart looks. There was the pop. That's the bubble pattern. That's funny. Pop. Consolidation. Probably coming back to 30. Well, it's already at 37, so it's almost there. Probably going to finish that up right there. Maybe like, what? How did you know that the bubble pattern right there? Look. Market cycle. Things get hyped. We just change what sector is doing this all the time. It's what's hot, right? It's like, oh my gosh, we're going to electrify everything. Lithium's going to be hot. Blah, blah, blah. EVs everywhere. EV was the trade. They talk about it like on the news and the mainstream media. Like, EV is the trade. And then AI is the trade, right? GLP-1 drugs, that's the trade. Watch for this stuff. When the trade's done, you get this consolidation and then you flush out back to real value. All right? Watch out. Watch out. So that's kind of the pattern right there. AI's in it too. SMCI. A lot of people are like, oh, look, same pattern. This went a little crazier, a little faster. Big consolidation. Coming back down. You can be like, JT, I think you're wrong. It's okay. I think I'm right. SBIT, short Bitcoin. Like I said, that is not a bullish looking chart right there. If that was a bullish looking chart, I would be shorting Bitcoin. This is not a bullish looking chart. Lower highs. And it may be because of the dividends and the decay, but that looks like it's going lower, which means Bitcoin probably going to go higher. And be careful there. UNH. Dang, look at that. Right to the target. Wish I could have stayed in that. I knew it was going up here for a long time. Just, I didn't have enough money to buy shares, and the options were ridiculous. Boom. That was where I expected that to go. And as far as next moves, probably retrace. May retrace back to the 550 area before we get up to 630. Do have support down here at these lows. Yeah, it doesn't look finished on the upside, so we probably going to do a retrace and then a final move up, something like that. We could wait till the roadmap line comes up and meets it too. There. So what does that look like on a chart we can actually keep an eye on? Something like this. Something like this. And then move up here. Yeah. That looks like the potential to me right now on UNH. Something like that, and then something like that. That could take, out to December and then out to middle of next year. Humana. Not looking nearly as bullish as UNH. Rejecting off the roadmap line. Maybe heading lower. 285 area. Looks like where we might be heading. RTO. Whew. Man. Maybe heading down to the 20s. Coin. We're just sitting at this. We're just sitting in this range right here. Waiting for Bitcoin and Ethereum to get their crap together. As soon as they do, this will probably rip in a big way. MSTR. Same. Potential to go up here. Waiting on Bitcoin and Ethereum. Nail. Probably coming back to the roadmap line. Failed to break out. See if we can hold the roadmap line again. Target's still up there, 172. Just not doing it. NVS. Now, if they cut rates, everything gets super hyperactive next week. It looks a lot like 2007. Now, I saw an X last night that the first rate cut. I'm gonna have to do some more research. I was looking at the chart on on the Fed funds rate. I was looking at this chart back here in 2007. Looked like to me the first rate cut was in August. Last night I was seeing that somebody was saying that the first rate cut was in September, half point cut. Maybe it was. I don't know. It doesn't look right based on what I'm seeing right here. They were saying that the exact date of the first rate cut back here was the exact date, the exact same day that we're having a Fed funds meeting this year. It's like deja vu. I don't know. If they cut at half point, we could see things rocket off, but then lead us into an epic down. NVS looks like we're coming back. GME. I don't think they should cut because I think they should just keep the market stable. I don't think they should have gone as high as they did, but I also don't think they should be just making willy-nilly cuts. I don't think they've killed inflation. Don't think they've killed inflation. So GME announced 20 million shares of dilution. Probably going to break it down, head back down. Probably heading back down here. DJT on the list. Oh my gosh, look at that. Holy guacamole, we got the target. Could go a little lower. Might return to the bottom. Might even make a lower low. Could come all the way back down to this $10 initial back price. Watch out for that. And Sledge, look, it did exactly what I said last night. Might even be breaking lower. DHI up to the targets. That is interesting. Look, home builders and supplies peaked out. Yeah, DHI is still up here consolidating. You don't usually see that that discrepancy between DR Horton and Nail. Something going on. I'd have to go look. Like, this is leveraged, so 3x magnification, but something's dragging Nail down. Arlay, I'm not even going to mess with that. That's biotech, and looks like it just needs a little more decline to be a dumpster fire. KB, financial. Watch these alternate financial things. Like, there's something's going on. Seeing some delinquencies. We're seeing consumer credit problems. It's bleeding over. Get another round of bank problems right into the cut. Maybe they have to do an emergency cut and cut a whole point or something like that. I saw something that was funny. It was it said, after watching the market do cuts and rate raises for years, it works both ways. Quarter point change, we're chill, nothing, no big anything. You know, everything's cool. We do a half a point change in the rates, in the Fed rates, and I'm not panicking. You're panicking. That's kind of the Fed's message. You know, we're trying to quell the market here. You know, the market's kind of panicking, so we're going to do half a point, and then anything like anything bigger than a half a point, it's like, dear gosh, you know, we're going to try to save the world. I mean, that's basically the Fed guide to rate cuts and rate raises. So anything bigger than a half a point is OMG, where, you know, the system's about to fail. Half a point is, I'm not panicking, but you're panicking. We're trying to save the market. And then quarter point is just like, everything's okay. Nothing to see here. Just making a little change. You think about it, that's kind of the way the market reacts too. LABU, 3x leverage on biotech. DPST, 3x leverage on banks. And that might break down. Let's see, what's my buddy FAS doing? And that looks like it's coming back to the roadmap line. You're topping out. AZ. It may come back up to the roadmap line. Wow. Hadn't been there since November of 23. We touched it right there in August. That's played out. Probably coming back down. You could play that 15-point drop if you wanted to. Probably won't pay big, but MS right back down on the roadmap line. So we're seeing a lot of stress in banks. That's odd. But look at, like, MasterCard right up near. I mean, this is the pattern to break out and run up to 500. Visa, 300. DFS still hasn't completed their merger with Capital One. Back to the roadmap line. POF. And this one, I'll be shocked if these guys don't report something crazy because they go after a little bit more aggressive on the going after the weaker consumer. And then bonus trade for the day, DLR. Look at this baby. That high, that low, closed above. Entry is today. Potential 165. I'll get you the exact numbers here. Open browser. Oh, let's just grab it and copy and put it in a new tab right here. So we've got the upside potential, the target 165.70, stop 140, $8.94. You know, with the pullback today, it's probably $9 upside. 76% of the time, historical win rate, 2.03. Historic profit factor. Typically takes 33 trading days, over 21 trades since 2004. It's not a very old ticker, really. Only 20 years old. So 33 trading days. You may be like, well, how long is that? Be right over here is the average. Be late October would be the average. Now it could go twice the average, 3 times the average. Could be, 5 times the average. We could be way out here. And the target right up there, 165.70. I didn't draw this perfectly, is what that says. Missed the top just barely. I don't have it set to snap, so 165.70 is the official target right there. All right. So there you go. And bias for the day before we wrap this baby up and go do something else. Bias for the day is still that caution. Like, look at that, taking it back. We're sitting in that range. Long as we're in this range, it's indecision. We get out the bottom. Odds are we're going down to 53, which is right where the roadmap line is. If we stay below 53, any length of time, we're probably going on down here. 45. Why 45? That's the weekly roadmap line. 45, 46, right there. Be careful out there today. The account you save may be your own. Have a great day, everybody. We'll see you again tomorrow morning. Same bat time, same bat channel. I do have a 1 p.m. thing talking about, I don't know, it's a product we're renaming to Engineered Income. If you want to come see it, come check it out at 1 o'clock. Me and Graham Lidman are going live at 1 p.m. I'll be live tomorrow on a third-party guest spot through that link out there yesterday. Links in Discord. If you want to come join me, I'll talk more about that tomorrow. So.